Hey, what's up, everybody? Welcome back to the podcast. It's just me today. Nobody to interview. We're going solo. And I thought it would be a great idea to shoot some episodes that are really geared towards educating people about real estate, what's going on in the news, all those types of things, getting people prepared for the next year as far as buying, as far as selling. So I'm going to do these they're going to be shorter podcasts. Certainly it's not going to be a huge conversation, but it's just enough to give you some thought. We're not going to debate here. We're not going to we're going to try to see all sides of what's going on in the world, especially when it comes to real estate. So we're going to get this thing fired up. But before we do, please go to our YouTube channel at the Markland Advantage and subscribe to that. We're trying to really build that up. And if you like podcasts, you listen to them while you're driving. If you can go to Apple or Spotify or anywhere you download a podcast, that's going to help us grow in the next year. We've done a lot of growth in this past year, but we're always looking to grow more. So please help us out with that. And without further ado, what's in the news? Well, you know what? The 50-year mortgage. The idea of a 50-year mortgage is currently being thrown around, and some people are calling it the most amazing thing, and other people are saying it's the dumbest thing in the world. And I'm not really here to pass judgment on either side. I'm simply going to break down a couple pros and a couple cons for you, give you something to think about, because a lot of times it's not either one side or the other. It's basically what's best for you in your situation. So without further ado, let's break it down. So your first pro of a 50-year mortgage as they're proposing for the coming year, because right now we're just in an affordability crisis. Home values have gone up since 2020 when we had COVID and we had interest rates super low. And everybody was buying, and we went into a low inventory market. And currently, as we speak right now in 2025, home prices have significantly gone up, and which is making it a little bit harder for the first-time buyer, really, and a lot of other people to be able to afford a monthly mortgage payment. I know when I refinanced back in the COVID days at 2.875, it was like, my mortgage payment was just under $2,000, and now I see people walking away from the settlement table with a similar house that are paying $3,000, $3,500, sometimes $4,000 on the mortgage payment. It's like, what? It's crazy. But with our interest rates being up and with home values being up, that has certainly crushed a lot of people and has made things a little bit less affordable for people to buy. So one of the things that the government is trying to do is come up with alternatives for people to make it more affordable. And so one of the things that President Trump has proposed is a 50-year mortgage. And so, like I said, there are pros and cons to both. So number one, pro, it's going to lower the monthly payment. And depending on the price point, that could be, $200, $300, $400, depending on the price of the house. And so with that being said, having a lower monthly payment means that people could potentially be able to be pre-approved for more. And because home prices are up and the need to be pre-approved for more, is a pro. That could definitely help some people if they can save a couple $100 a month, because the cost of living for everything else has gone up. Every little bit's going to help. So that is a positive. That could be a positive for first-time home buyers. It could be a positive for investors. And, of course, with rising prices, it could help some buyers that couldn't afford at a 30-year mortgage, and maybe they can swing it with the 50-year. So it's going to increase that buying power. Lower payments absolutely are going to help with people with that. And again, you got to almost look at the numbers. And maybe what I should have done was put like a little infographic here of what's, a typical $500,000 house and what that looks like with a 30-year mortgage versus a $500,000 house at a 50-year mortgage, to see what that difference is. Maybe Drew, we can put that up on the screen. What do you think? All right. I don't know what it is right now, but what's this bottom line here? What's that difference? Let's see what happens in post-production. Okay. Another thing, like I said, it was going to help for investors, is that if they have a lower mortgage payment, they're going to be able to cash flow more on that property. So, let's say the rent is $2,000 and the mortgage is more than that. Well, then you're negative cash flow right now. But if you can get that monthly mortgage payment down lower and the rent is a little bit higher, then you're going to be able to cash flow a little bit more on that property, helping investors out. Again, it might not be right for you as the investor, but it could be right for somebody else. So the flexibility, having the flexibility that you can always refinance later. 50 years is a long time. So in the next 50 years, I might not even be here on this earth. I'm 50 now. Even a young buyer at 25, by the time they would pay off that 50-year mortgage would be 75. There's certainly pros and cons to that, but for the majority of the time, people either move again or they rarely do they stay in the same house for 50 years. So you do have the ability to refinance to a lower mortgage, which could be an option, again, for other people. Now, certainly there are cons to everything. And look, I think no matter what decision you do in life, there are going to be consequences, no matter if they're positive consequences or negative consequences. We always think of consequences being negative. There are consequences that, you think that this is going to be great. Like, for example, back in COVID time, you had interest rates drop below 3%, and that was awesome, right? But they stayed there too long. And that's when the home values just skyrocketed because people were getting in these multiple bidding wars. And now it's created this, affordability crisis. And did you know that the average first-time home buyer right now is 40 years old? 40. That's crazy. 40 years old is your average first-time home buyer. So the people in their young 20s, they want to get the American dream. It's very challenging. So you really want to think about that, saving your money and putting it away. People are getting into houses because they're getting some help from their parents, gift money and stuff like that. So these are all things that could possibly negatively affect us with these with having such lower interest rates, because once they drop down and they drop down significantly, that's only going to be bringing more buyers and more competition into the market. So let's go over some cons for you in this whole 50-year mortgage deal that Trump has put out there. The first one is you're going to be paying a lot more interest over the course of the loan. So in a regular 30-year mortgage, at the very beginning of the loan, your monthly payment is going significantly more towards interest and less towards principal. And over the course of a loan, of a 30-year loan, you're buying a $500,000 house. If you stuck to the minimum monthly payment every month for the 30 years, you're going to be paying over $1 million, for that $500,000 house because of the interest. Now, take that 30 years and expand it to 50 years. So what's going to happen is you're going to be paying a lot more interest and a lot more money over the course of a loan. I haven't even figured that one out. But yeah, just imagine how much that would cost. Maybe we can put that graphic up there too. We're making Drew work hard on the post-production of this. Let's see what that looks like. A 30-year mortgage and a 50-year mortgage. What's that interest going to be paid over the course of a loan on a 30-year and a 50-year? And let's see how big of a difference that is. I'm excited to see what that looks like. So if you're listening to this on Apple, Spotify, you got to go to YouTube to look at that breakdown, right? Because I don't know what it is right now. So yeah, you're going to be paying a lot more interest over a 50-year loan, again, unless you refinance. But then that's the other thing too, is it's a slower build on equity. So, people that bought before 2020, right before 2020, and then refinanced, and then they sold. I had some clients that made $50,000 to $100,000 in 1 year based on that rapid growth. Well, when you have a 50-year mortgage and you're paying a lot more towards interest in the beginning of the loan, you're not going to be able to build as much equity in your house. So that, real estate being one of the biggest investments, if you're paying more towards interest over the course of that loan, then naturally you're not going to be putting as much towards the principal. When you're not putting as much towards the principal, you're not going to get as much equity when you go to sell. And a lot of times people will buy their first home, small home, and then build that equity. And then when they go to sell it and they sell it for a higher price, they also have a lower payoff on their balance. And so that number is definitely going to get smaller when it comes to that resale and the profit that you can make to then put onto the next house when you're trying to expand. You start having a family, you need a bigger house and all that, and it's going to be more challenging than, say, a 30-year mortgage. So So the slow equity build is going to be another issue. I foresee another issue is that you could be remaining in debt for a heck of a lot longer, especially over a term of 50 years. Again, you want to try to pay towards your principal as much as possible in whether it's a 30-year or 15-year, paying down on that principal. One of the recommendations that I've often heard, and we tell our buyers all the time, is if you can create one more mortgage payment a year on your overall mortgage on your principal, if you can pay that down, you take a 30-year mortgage and you turn it into 23. So 7 years of interest knocked off. You're saving a lot of money in the long run because you're paying down on that principal. So, take your monthly mortgage payment, right, and divide that by 12, and then take that amount of money and add it to your regular monthly mortgage payment, and you can do it that way, or you can just turn your monthly payment into biweekly payments, and that's another way that you can do it, where because there are some extra weeks in a month over the course of the year, if you pay biweekly, you're going to be able to pay that down. You got to make sure that your mortgage company allows for you to pay biweekly. But if they don't, again, take one mortgage payment divided by 12, and then add that number onto your mortgage payment every month, and you're going to save about 7 years on your mortgage. But if you have a 50-year mortgage, man, I don't even know what that math looks like, and I'm not even going to force Drew to put that up on the screen. So something to think about with 50-year mortgage as well. And then you're going to have a higher interest rate probably with a 50-year mortgage, because as the duration of a loan goes higher, the higher the interest rate, because it's the more risk on the bank. So a 15-year mortgage has a lower interest rate than a 30-year mortgage, and then a 30-year mortgage is going to have a lower interest rate than a 50-year mortgage. So it's really looking at the numbers, looking at your situation, and seeing what the best thing for you is. But these are all things just to think about when you're looking at this new 50-year mortgage and deciding whether it's going to be good for you, even if it might not even happen. We don't know. This is the plan going into 2026 to try to help people be able to afford housing. But again, there are pros, there are cons. What do you think? I want to get your opinion on this. If you could leave a comment in the comment section, where do you fall on this? I'd be interested to hear. If you're following us on YouTube, subscribe to us on the podcast channels, Apple, Spotify. If you're on Facebook and Instagram, we're at the Markland Advantage. We'll have this on LinkedIn. Definitely want to see your comments, your thoughts on this, and see what happens in the next year. It's going to be interesting. So if you thought this was valuable, please share it out and help us grow the channel. We're trying to do good things. If you know somebody that's doing great things in the community, we're trying to get some awesome guests on here. So please hook us up and make that connection for us. And that's it for today. So thank you so much for joining us. I appreciate all the love and support over the past several years, and we're just going to keep on growing this thing. Until next time, folks, live your life to the fullest, and we'll see you soon. Take care.
Did you like this episode of the TMA Connection? Well, you might want to check this one out right here. Go ahead, click it.